Good afternoon, everybody. Welcome to the session. A couple of bits of housekeeping. We'll jump right into Zach's presentation. Thank you for everybody participating in these events. Keep your feedback coming to us. We get better and better. Secondly, if this is your first time joining a virtual show at Money Show, there is an interactive chat box next to the player where you're watching Zach present. Please send over some questions during his presentation, and time permitting, he's going to get to as many as he can. We are going till 2:45 Eastern time. And with that said, it is my great pleasure to introduce to everyone Zac Mannes, who is the co-host of Stock Waves and Mining Stock Service within ElliottWaveTrader.net, I'm sorry, providing wave alerts and wave setups on individual stocks as well as the miner's model portfolio. He also co-hosts the site's weekly Beginner Circle webinar for new members, and he is one of the founding members of the ElliottWaveTrader.net site. Zac, great to have you back, my friend. The floor is now yours.
Thank you very much, Joe. Just one correction there. We have to get that changed again. It's the Metals Mining and Agriculture Service. It runs very similar to Stockwaves, but focuses on that area. The problem is we launched it in 2015, had a model portfolio, but we weren't getting very many pullbacks for new people coming to the service to be able to add into the portfolio. So we went to a wave setup model, the same thing like we do in Stockwaves. So it doesn't have an ongoing tracked portfolio there.
Got it. I'll make sure Debbie and programming know that going forward.
Okay.
Thank you, sir.
So wanted to talk with you guys today about some of the different indicators that I like to use in conjunction with Elliott Wave. As Joe mentioned, I run Stock Waves and the Metals Mining and Agriculture Service, which are parts of ElliottWaveTrader.net. Everything that we look at is first and foremost through the lens of Elliott Wave. So I'm not quite sure how many of you are familiar with Elliott Wave, but wanted to give you just a very, very quick primer so that some of the other stuff that I'm going to talk about makes sense. When we talk about Elliott Wave, we're talking about dividing up the market and looking for patterns of sentiment, and those patterns are either motive or corrective wave structure. Motive means they move and advance the trend, and corrective means they retrace or go counter to the trend. Most of the time, we're talking about things in terms of 5-wave groupings, which are numbered either regular numbers or Roman numerals, and letter groupings most of the time A, B, C. Within a motive wave structure, we have two different types of structures. We have an impulse, which is going to be a stronger, more trending move, and then we have diagonals, which are still motive wave structures, but they are characteristically have 3-wave structures for all of their subwaves and are choppier structures that allow for a lot more overlap. One of the advancements that our founding member Avi Gilbert brought to the world of Elliott Wave was his understanding of Fibonacci pinball. And so AJ Frost and Robert Prechter, advancing on Aaron Elliott's work to create the Elliott Wave methodology, talk about Fibonacci extensions with regard to certain different waves, whether it's a C wave or a third wave. But one of the things that Avi noticed with such regularity, it could really be added to the actual rule book, which there's a lot of guidelines, but there's very few rules in Elliott Wave. But this is probably one that could be added to it. And that was the subwave structure that he noticed within a third wave. So in addition to having your normal Fibonacci extension tool, where you're looking for a 1382 or a 1618 Fib extension as a standard move for your third wave, he noticed that the subwave one inside of that was going to very regularly head to the 382, the 0.50, or the 618. Then you get normal consolidation as the wave 2. Then the third of that wave 3 was going to go to the 100% of the 1236. Then again, normal guideline consolidations for the wave 4. And then the 5 of 3 was going to go to either the 1382 or the 1618. Then you could continue to use the same Fibonacci extension tool projected off that wave 2 to find reliable support for your wave 4. And then the next extensions, either the 1764 or the 200% extension for the actual 5th wave. We set our clocks by this. It happens with such regularity that we know that when we don't get a 5-wave up move into this ideal zone for wave 1, that we immediately start to look for something other than an impulsive third wave. So that's just something important to know. We have a lot more information on how we delve into the different degrees of Elliott Wave structure and look for balance there, and a lot more primers and information on Elliott Wave. This is a shorter presentation today, so I didn't want to take up too much time with that. but you can get to some free content that's educational content on Elliott Wave using this QR code in the link provided. One other thing that I wanted to talk about before we jump into our indicators was just a broader market context. Elliott Wave was invented by R.N. Elliott back here in the 1930s. That was at the lows of the Great Depression. And at that time, he projected a 70-year plus bull market as this super cycle degree wave 3. And we have filled out 5 subwave structures at the cycle degree, counting the 2008, 2009 lows as the cycle degree wave 4 inside that super cycle wave 3. And inside that cycle degree wave 5 off of the 2009 low, we can count a primary 5 waves up nearing completion. We haven't seen any clear identification of a top yet, and indeed at the smaller degrees have some structures that are looking for further extension higher. But this does give us a much broader sense of risk context and risk skew in the market. So we are very, very selecting and discerning of long setups and always trying to look for some of those things that could be giving us some warning signs that they might be some of the first dominoes to start to drop, and getting some nice follow through on some of those short setups, even if the rest of the market isn't doing anything to the short side. As Joe mentioned, in stock waves, we focus a lot on our wave setups. Those are targets that give a specific directional bias based on Elliott wave structure. They have favorable risk reward, are usually pretty actionable coming into an ideal support region. And we have very specifically laid out support, resistance, invalidation, and target levels. We also have a symbol request tool. We do regular videos on Mondays, Tuesdays, and Wednesdays. We have a weekly webinar on Thursdays, and then also have special updates that are put out by either Lynn, our articles on where fundamentals meet technicals by Lynn Alden, and then sometimes special updates when we're at a pretty significant bottoming region. A lot of times we'll put out a quote unquote shopping list of some names that look like they're better positioned to capitalize on any bounce or move higher. And then we also take a look at everything that is reporting earnings either after the market closes or before the market opens the next day. So the first of the indicators that I wanted to talk about with you guys today is the PSAR. Technically, that stands for Parabolic Stop and Reverse, but I like to refer to it as the Parabolic Support and Resistance. And remember, all of the indicators we're using in conjunction with our Elliott Wave. But I think this is a great tool that really does help illustrate support and resistance levels. It is not a leading indicator necessarily. It shows shows trend and momentum and changes thereof. So the PSAR was developed by J. Wells Wilder Jr. I find that it works best on larger degree timeframes. And again, it provides a confirmation of the trend. And usually when it finally shows a signal that the trend is flipped, you're already pretty much well into the move at that degree in terms of a move off of a bottom or off of a top, just the nature of what causes it to change. But we like to use it as a good additional confirmation tool, particularly when we're looking for a more significant bottom or more significant top and trying to see a larger degree change in trend, while we might be following that structure at a smaller degree and already playing some of the smaller moves within that. It's nice to get that additional confirmation at the larger degree. So rarely are the dots. So what it does is when price moves up through the resistance dots, those dots flip to the lower side of the price trend and print as bottom dots. And then again, if the price goes through that dot, then it prints the next dot for the next bar, whatever the time frame your candlesticks or bars are, will print to the higher one above. So I like to use the 4 hour and the daily for the most part. and have found that most of the time, especially at that time frame, you rarely see a single dot or even only two or three. Usually you're going to get several of dots in a row. So it does give you, that doesn't necessarily mean that if you get a flip to one, that price is going to continue immediately in that direction, but it's going to be at least a couple of those candlesticks before it even comes back to test that level and threaten to break over it again. And again, we're using the smaller time, it can be used on the smaller time frames too. And using it in conjunction with Elliott Wave is going to be even more predictive. This is a screenshot of the window from my charting software. I use Motive Wave that shows the settings. So there's an initial AF value, which is 0.02. The max AF value is 0.2. And then the step value is 0.02. I'm not going to get into the math because that's not my strong suit. So we'll just leave it at that. So here's a good example of it being used in context. Here's a screenshot of a markets post talking about the S&P mini futures. This was from back in January 2023. Had initial move off of a larger degree bottom. Turned out this ended up being an alt wave 4, and we're getting further extension, but we had an initial move up, corrective consolidation, and we're looking for a swing move higher at the time as a C wave of a B into the resistance in the 4,500 to 4,600 region. But we're looking at a good structure starting to form off of that low to confirm a bottom. And I posted that we had already gotten 2 of the bottom dots. So that was starting to confirm a change in the trend, and we could retest that support region from those 2 new bottom dots, but that this should last us a little while, at least to get more of a wave 1 and a wave 2 in the start of that swing move off of the low. So sure enough, looking back at that same chart as it filled out, ended up being a larger A wave off of that as the wave 4, but we did continue to fill out more of those bottom dots on the daily time frame. Got a deeper than ideal retrace, but then started to flip again and did indeed fill out towards that 4,600 region. Here is looking at the gold chart. This is from one of my morning updates, which I do pretty much every morning back in October 2023, looking at a pretty large intermediate degree, wave 1 and wave 2, off of a significant bottom in gold, and looking for the start of a wave 3, which should be an ABC wave up, at least into the 2,400 region is our normal reliable fib extension. It ended up getting a lot more than that, but starting to note how we were getting the flips there on the daily in terms of that support. Also included in that update, I included a 3-day for gold that had just printed a bottom dot there, so that's even more significant. Also a 3-day for GDX that had just printed a bottom dot, and also showing how significant of a low, and even included a GDX weekly showing that price was coming right up and about to flip over the weekly PSAR dot to be even more indicative of a significant change of trend. Of course, here's what we ended up with for that gold chart. Even made a further extension from here. I think, or no, we're testing this 3,400s again right now. But filled out the rest of that A, B, and then a very extended C wave of wave 3, all the way up into the 3,500s, nearly to 3,600. In GDX as well, off of that wave 2 low, got the very, very deep wave 2 retrace, like we saw that sometimes happens in on that ES chart, but it did not break into a lower low, so held valid as the 1-2 start, and is continuing to fill out very, very nicely. I've added this purple A and a B wave inside a larger A as a slight alt, but there's a lot of overlapping structure between that potential. So I joke around and try to post a lot of memes here, but I did mention that bottom dots rarely come as a single, I mean, even any top dots either, but they're usually not solitary creatures, and you're going to get some continued of those even if you break under it again for the wave 2 consolidation, you're going to get a nice series of those to fill out in the start of a move, particularly when you're looking for that change of trend. So the next thing that I wanted to talk about is the eye clouds. Those are the Ichimoku Kinko Hayo, I think is how you pronounce it. I use it, you might have seen already on some of the other charts that we were looking at. I use this in conjunction with the PSAR dots. And I don't use this on every chart, and I don't even use it all the time on gold and on ES even. But I do look at it more regularly on those. It can make the charts really busy, particularly when you're dealing with trend lines and fib extensions and Elliott Wave notation and other stuff. So I usually keep a tab where it is just a cleaner version of the macro Elliott Wave count, and just looking at this as an indicator by itself, and then keep cleaner tabs without these indicators on them for trying to show more intricacies of the Elliott Wave pattern. But this is essentially similar in terms of a support and resistance tool that I think really just helps you visualize where those key supports and resistance levels are. It's calculated in some ways similar to the PSAR, but it also has a component that shifts that calculation forward, and that's where you get these different clouds, which are kind of a mixture of some moving averages and some other things. I don't exactly know the details of how it calculates all of the math. These are the inputs if you're trying to replicate it on your own. The TS is 9, the KS is a 26, and the SSB line is a 52. That's just what I use. I think that's the default. So again, I use it mostly in conjunction with PSAR, and it's really good at showing. One of the things that I like that it does is it kind of shows where the possible support levels are, because it kind of advances that resistance and support line that you're getting from the PSAR and shifts it forward. It has some interesting interplay with what we're looking at. So here's a nice example where we started to get some flips on the daily on this ES chart. This is from back in March 2021. In the middle of a bull trend, we started to get a little bit lower than ideal for the fourth wave inside this third, inside this wave 3. So that might have been a little bit concerning because it's under the most ideal support, and you did get a nice series of top dots on the PSAR, but started to form bottom dots on the PSAR, and also it caught that support from the cloud, and then it continued to ride above that cloud as well for all of the remaining consolidations into the rest of that wave 3. And then it dipped a little bit under that, and that's a nice indication also that I look for, where the first initial break is often the fourth wave before your final move, where it's going to dip a little bit under that support. And then you get some of this where the cloud twists and turns into a red also during that fifth wave. And then after that fifth of that larger wave 3, that's where you get an actual break under that cloud support. And then it went on and functioned as resistance from there. And then in this B wave consolidation inside that larger fourth, you break over it again, but then promptly flip back down for the A, B, and the C wave structure. Oh, I forgot that I animated those points on the chart. So here's another look at using that same iCloud chart. Here we were looking for a possible top to that wave 3, which we know extended up to the 3,500 region, but we had an initial top dot that printed on the PSAR. The Elliott Wave structure, we knew if this was the start of a bigger move, it was going to be an A, B, and a C wave down to the 2,700 to 2,500 region, if that was the top. But that this A wave was likely to be an A, B, and a C wave move. So that was first going to catch some support and at least get a pretty decent bounce off of that 2,900s region as the initial A wave. So we did, in fact, hold where that cloud was, and then got an extension from there. So we held in the 2,900s, started to get a bounce, and then flipped over resistance, and then continued on to that further extension into the 3,500s for the same wave 3. And now you see we're threatening and have already dipped under that cloud support in the possible start to this C wave down in gold. That's a little bit more advanced of where we are now. And here's another look at the same structures using both of these together in conjunction with each other on the Tesla chart. This is looking back in early 2025. In March, when we got more of a retrace than we wanted to see, starting to get a little bit further below ideal support at that 200-day moving average, the fib support region, this was about a 618, and the cloud support, we did end up dipping a little bit below that and then have recovered very, very nicely, but that did act as nice support structure. Now, after getting that A wave and then another B wave off of that low, we're looking for a continuation of the move higher as a C of 3 off of that April low. This is looking at the 1 day, trying to hold support in the 290s region. And then here is also a little bit further advanced, trying to flip over the 330 would be the key resistance on Tesla at this point to pivot and break loose inside the heart of this C wave to the upside. And again, that 290s is still going to be crucial support. The last indicator that I wanted to go over today, unless we end up having a little bit more time, is the CAB PCR. The CAB PCR stands for the Cow-A Bunga put call ratio. When I first started with Avi Gilbert on ElliottWaveTrader.net, I was still under a different broker dealer's compliance. So I was anonymous and I went by the screen name of Cowabunga. So here we have Homer surfing on the wave. But I developed a put call ratio that instead of looking at actual numbers of calls versus puts as the standard put call ratio, that it tracks a total dollar value, relative dollar value of puts and calls. There's a few other tweaks to it that I use in terms of flipping some things and cutting off some noisy ends. But it gives me this nice oscillator that I put at the bottom of my SPX chart, or at least one of the tabs of my SPX chart, which functions nicely as an oscillator similar to like a stochastic or a MACD or RSI, where I've identified some regions that typically that it typically oscillates between. That's like the 0.35 region to the 2.0 region. And then some regions that are like further extreme from that are, and usually the higher end, if the high prints of this indicator are far more indicative of bottoms. It sometimes will get embedded or just bounce around on the lower level and isn't usually a good topping indicator. It can be something else that shows that things are, susceptible to forming a top, but not something that marks as something as eminent as a top as it does more significant bottoms. So on April 7th, I noted that, so that was that previous chart. This was from April 6th. I posted in the beginner circle before the weekend. I usually post a couple of good charts for everybody, not just the people in stock waves or in markets, and said that we were getting a pretty extreme reading, but and most things were due for a little bit of a bounce, but it was probably not going to be the low, and looked like we should get a little bit lower the next week before an actual bottom. So then here on April 7th, noted that the CAB PCR hit over 4, and that was a pretty significant outlier extreme level that was hit. And I noted the last times that it had done that, and that where they were in relation to more significant bottoms. And so at the very least, we're looking for a pretty big bounce and the potential to get extension to another high up towards the 6,600 to 7,000 region if it was going to take that path for more bullish extension. So use that as an opportunity to, oh, this is going back further. Oh, this was just looking back at some of the previous extremes of when it had hit over 4. But we used that on April 7th as an invitation to post one of those special updates where we posted a lot of different names. We knew that the market was at least going to get a pretty decent bounce into the 5,600 to 5,800 region of normal resistance for a B wave, and that if it was going to get this fifth wave up, it was going to get something similar to that as the A wave inside that wave 5. So we looked at different names that were likely to carry that more significant bounce, even if it was ultimately setting up something that could be more bearish, or things that could get the first move in a move to new highs. And we parsed that list out, added to it on the webinar the next day, added some other names, but basically those were names that had strong likelihood of taking that green path to higher highs, where they should at least get the first move, whether it was a 5-wave move or an A of the ABC up for that 5th wave. And then names that looked more like they were setting up to be more bearish, but were due for a pretty significant bounce, and discussed a lot that a lot of those names in the second list could actually get more significant upside move off of those April lows. So fast forward to more recent charts. This is still from end of July, extended a little bit more, but trying to hold as an A wave and get a consolidation as a B wave to get an even bigger swing wave move up as the C of that green wave 5 into the 6,800 to possibly 7,000 region. And looking for the names that are more likely to hold that B wave support, if we can get some nice consolidation to set up that next move, and then just continue to move stops up on all of those things that we traded to the long side, but have certainly gotten over reliable resistance for this to be the B wave inside any start to a corrective move. Although since S&P and other things are at higher highs over this wave 3, there is a risk that this could be finishing up all of this 5th wave instead of just the A wave of that wave 5. So those are all the slides that I really wanted to get through. I have some other stuff that we can look at, but I wanted to leave room for questions in case there were before our time is up for today.
Zach, thank you. I guess you've been super succinct because I can't believe that there's no questions. We do have about 2 or 3 minutes left. Great presentation, but I have asked folks, there's a good number of people in the room, so don't be shy. Send it over. We've got a couple of minutes left if you want to add anything else.
Okay, another indicator that I like to use are the fast graphs that Lynn Alden introduced us to. And she posts these in all of her articles of when fundamentals meet technicals. We were drawn to Lynn's analysis because she tends to be a little bit more contrarian to most fundamental analysts, at least most of the ones that we saw on Seeking Alpha at the time, and have really enjoyed the collaboration of working with her. And just some examples, here's a chart from Garrett pointing out a nice turn up off of a significant bottom in PayPal, and she's highlighting how it is significantly undervalued based on the fast graph. And then here's some other examples that we were bullish on Copa, and she's showing that it is significantly undervalued there. And we share her views that Walmart and Costco are incredibly overvalued and would love to see some significant consolidation in those for them to get reined in and be back in line. And I don't know if they're ever going to be good value plays for a while. And here's another example of bullish setup on AMD from back in April that we saw. It had been a short. It reached our target on the downside and then had a nice reversal and then a corrective consolidation. And her fast graph was showing that it was nicely undervalued as well. So that gave us a lot of conviction for a wave setup targeting at the very least the 131 region. And then we ended up getting more extension in a higher version of that B wave bounce as it carried higher in that C wave. I don't know if I have time for anything else, Joe.
I'll mention Lynn. We had Lynn on yesterday. I moderated for her. She was great. A great presentation on fiscal discipline. One last question. Michael Marr is asking, do you ever use the options max pain as one of your indicators?
I used to look at that, but I tend to just, there's you got to draw the line of like how many different indicators you try and include, and I just don't have time to really go and check that and see how it's going to incorporate into my Elliott Wave. I have a couple members who track that, or some different volume band regions, and try and use that in conjunction with the Elliott Wave analysis that Garrett and I put out. And sometimes it catches my eye when they post something, and I'll pay a little bit of heed to it, but most of the time it's not as much on my radar.
Terrific. Well, we thank you. Excellent educational presentation for everybody. We had a good crowd in here. Want to thank everybody for joining us. Zach, appreciate you again for coming back and educating the crowds. I wish everybody a good rest of your sessions today here at the Money Show, and everybody have a very good week. Zach, thanks again, my
Yeah.
friend.
Take care.
Take care, everybody.